Hey guys, so in this video, I'll show you how I got funded with 25K with Funded by Traders. And in this video, I will go over the model that I used and break down some trades that I took. And we'll also talk about how I managed my risk and handled the losses. So it's going to be a detailed one. And make sure to watch it till the end because you're going to learn a lot from this one, I'm sure. So let's begin. So I started this challenge on 9th of July and passed both of phases on 8th of August. So the duration was almost 1 month, right? Now let's get into the model that I used. So I used my main model, which I will from now on call swing model, and this works on any time frame. I don't care what you call it, to be honest. You can call it beta simp model. I don't care. I use three time frames in this model: the higher time frame, the middle time frame, and the lower time frame. So I use the higher time frame to get my bias, the middle time frame to help me confirm that high time frame bias, and the lower time frame to get an entry after the middle time frame confirmation. Now it seems like a lot, but trust me, it's really simple, and I'll actually make it really simple for you. Since I'm a scalper, I use the daily or weekly as my high time frame, then the H4, H1 or M15 as my middle time frame, and the M1, M5 and M3 as my low time frame. But you can use any of these time frame alignments that are shown on the screen. Now let's get into the visualization of this model and you will understand it better in the most simplest way. Assume this is your higher time frame and this is your middle time frame and this is your lower time frame or the entry time frame. Now, how would I use the high time frame for my bias? So it was simple. I would look into the order flow or ERL and IRL. That's enough for my bias. So if let's say if I was watching the price right here, so external range has been taken out. Assume this is external range liquidity. So external range liquidity is taken out. Now I would expect it to come back into the internal range liquidity, right? So once this is taken out with confirmation, I will actually switch my bias to bearish and I would target the internal range liquidity. Once it is at internal range liquidity, I will look for middle time frame confirmation and I will target the external range liquidity, which is here, or it might be here, or it might be this high. Then once this is taken out, now I can look for the same confirmations again and target the internal range liquidity once again, right? So this is how I will get my bias. This was on the higher time frame. Now, when I say confirm it on the middle time frame, let me explain what I mean. So if let's say I'm bearish and I expect price to come lower on the daily chart, or let's say the weekly chart, or like whatever your high time frame is. So I will wait for a bearish market structure shift, right? Once this happens, this isn't a confirmation yet. I would actually wait for the market to take out a high, right? Once that high is taken out and if price breaks lower, this is a confirmation. One more thing that you can do with it is that once price takes out this high, you can go into your lower time frame and from there you can look for the same pattern and this is where you will look for your entry. So if let's say price takes out this high, let's assume this is that high, there's a market structure shift, right? This is the first thing we are looking for. Then there is this red on this high, and then there is this push lower. So we can anticipate that this is our intermediate term high, right? So this is where my entry is going to be. This is where I will enter. This is where my stop loss is going to be. And I'm going to target the internal range liquidity if we are talking about external to internal in this case, let's say. Now you can just reverse this whole chart and it will work for bullish trades as well. And it doesn't just work for ERL to IRL, it works for IRL to ERL as well. Now, the other way up entry in this is you are gonna wait for this high to be taken out. Then once it breaks lower, then you are going to wait for price to tap a fair value gap or internal range liquidity on this time frame. And then you are gonna go into the lower time frame. For example, this is that internal range liquidity which is tapped in. Now you are looking for that same pattern again and the same entry again, and you will have your stop loss right here and target the lower prices. Now this is a very simple explanation to my model. If you want a complete guide on bias. I have a video about that and it is linked below. You can check that out. And if you want a detailed video of my model, it's also linked below. So you can check them out. But before watching that, I would actually recommend you to complete this video and then go to that. Alright, so this was about the model. Now let's get into the examples, or actually the trades that I've taken based on this right here, so you get a better idea of what I'm saying, right? Take a look at this right here. This is the daily chart of Nasdaq and price is at internal range liquidity and the trend is bearish, right? So what are we gonna expect? We are gonna expect the market to go into the IRL. So IRL to ERL, this is where I got my bias from. This is the higher time frame. Now what am I gonna do next? I'm gonna go into the middle time frame, which in this case is 1 hour chart. And after price tapped this weekly order block, we had this SMT with ES, which is a confirmation. Also, we have this high taken out right here. So this is an opportunity for us to get in a short position. There's a market structure shift already. There's this high taken out. Then there is an SMT. So that's like a very confirmed bias. That's like very, very confirmed middle time frame confirmation that we are going to go lower. This is the low time frame chart. Now, remember what I told you, how we are going to look for an entry. So first we are going to wait for market structure shift, which happens right here. This is after that SMT with ES. Now there is a high that is taken out and then there is a push lower. So I told you that once that happens, we are going to enter and have a stop loss at the high. And then we are going to target the sell side liquidity. And take a look at this trade that I executed. This was a market order, and I think this was somewhere around 5.2 R or something like that. And yeah, this is just my account. Here is another example, and this is the daily chart. And this is actually the trade that got me funded. Okay, so we already took out the external range liquidity. We closed opposing way, so that's the confirmation that price is coming towards this internal range liquidity. So my bias was ERL to IRL. That means I was bearish in this trade. So I'm going to go into the middle time frame. Now on the middle time frame, we see a high it's taken out, right? We already have a market structure shift above here, right here. And we have a high taken out, and that high is significant. It's the previous day's high. Then we have a market structure shift on the 1 hour chart as well, and we are at internal range liquidity. So as I told you, that we are actually going to wait for price to either take out the high on the middle time frame to look for an opportunity on the low time frame, or we are going to wait for it to get into the internal range liquidity and to look for an entry there. Here is the low time frame chart. And if you look right here, this is that 1 hour fair value gap. There is a market structure shift already, but I didn't enter here. And the reason is that there was no intermediate term high formed here. So remember I told you that we are going to wait for a high to be taken out, and we don't see it here. Price just moves lower and then aggressively moves higher without taking out a high and breaking lower. So yeah, I was waiting for a high to be taken out and then was waiting for market to push lower. After market went higher, we see a market structure shift here. This is a low that is breached. Then a high is taken out. That price breaks lower. So I enter here, as you can see in the execution. I enter here with my stop loss right here. Now you may ask, why not here? And the reason was because there was a news. So I was kind of trying to get safe because we have this crappy kind of price action before news. So that's why I had my stop loss right here. And you can see that after the news release, price just met my drawn liquidity and it went lower, tapping my profit target. So this is how I passed it. Now, this is the certificate. Let's get into one final trade. Okay, so this is the final trade that I'm going to explain. And now look into this. We are at weekly IRL. So I was expecting the market to go into the external range liquidity. So bias from the high time frame is bullish. Now, this is the 4 hour chart. And if we look into the 4 hour chart, we see that price took out this low and then went higher. So this suggests that we are actually bullish and we are going for the external range liquidity. Also, it was a fair value gap. This is the M15 chart. And now here, if you are confused, why am I using so many time frames and then executing on the 1 minute chart? The weekly chart was just an extra confirmation. This is what I considered my very high time frame, the 4-hour chart. The M15 is my middle time frame and for confirmation. So this is that 4-hour fair value gap. It's taken out, market breaks higher, right? This suggests bullish prices, right? Then we have this low and it's taken out. So now remember the model. So once a low is taken out, our high is taken out, that's our opportunity to get into a long or short on the lower time frame. So I'll go into the lower time frame chart for execution here. So I was waiting for this red on the low and then break higher. So price broke the low, went higher. I entered here with my stop loss at this low. And I want you to look at this. The trading conditions were so good. Like price came all the way here and it was so near to my stop loss, like very near, but I wasn't taken out and price went to my TP. Now that we are talking about trading conditions, let me tell you about the prop firm that I trade with. It's funded by Trader, and I simply love it for its trading conditions. If it wasn't for their trading execution, I might be in the challenge phase here due to that stop loss and due to many of the market executions I've made. I won't make it too long, but it's a great firm with static drawdown, fair prices, excellent trading conditions, and responsive CEOs and support. Check the link in the description for a discount code. By the way, all of these trades were shared in my premium Discord and then analysis and updates were given in Telegram. But listen, if you are planning to join just for the sake of signals, kindly don't. It can never help you. So if you want to learn something, yeah, then go on and join. I'll be honest, I'll highly recommend my free Telegram more than anything. So it's linked below. You can join it. You don't have to pay me money. I'm fine without that. And now that we are done with the model, let's talk about the risk management. So my risk management for this challenge was very dynamic and it wasn't fixed. I took my first trade with 1.5% risk and the other one with the same risk too. And I ended up losing both of them live on a YouTube stream. So I went into like 5% drawdown to begin with. Then I reduced my risk and went with 1% risk and continued with that till I was like in 5% profit. There I started using 1.5% again and passed it. This is how I cleared my phase 1. Now for phase 2, I wanted to get clear in one trade. So I took 1.7% risk and targeted 2.5 hour. But I actually missed just the profit target and thought it's 4%, but it was actually 5%. I would have risked 2% on that trade if I knew, but yeah, shit happens. With the 1.7% risk, if I extended it to like 3R, it would get really unrealistic because it was a long and the buy side liquidity was at like 2.5 hour or something. So yeah, I accepted and tried to prepare myself for the next trade. Took the next trade with like 1.3% risk and passed the challenge. Now, what will I recommend you to use? I would suggest you guys to reduce the number of trades and win big in a couple of trades rather than risking less or targeting less. So either risk more than 1% or target more than 3 to 4 hours to get the challenge done as quickly as possible. The more you stay in the challenge phase, the more likely it is for you to blow it because humans want reward for their work, and in challenge phases, you get nothing, which makes you question your hard work and makes you rush the process by taking low probability trades. At the end, thank you so much for watching. Give this video a like and subscribe if you found this helpful, and see you in the next one. Goodbye.